If we're not careful, we could have a very sharp, nasty recession, meaning kind of a negative 5% GDP recession. We've got the forward-looking indicators, this monetary tightening, suggesting we've got some real pain to come. Now, the question is how bad does this get?
Welcome to Dream Richer. There's a common understanding now among all economic experts that extreme pain is coming. According to all major financial whales, like Michael Saylor and Raoul Pal, the next few months will be very ugly, as Feds decide on how to keep the economy from collapsing. The International Monetary Fund recently released a warning that it sees inflation soaring to 5.7% in advanced economies and 8.7% in emerging and developing economies. The world economy is at risk of another financial meltdown following the failure of governments and regulators to push through all the reforms needed to protect the system from reckless behavior. With global debt levels well above those at the time of the last crash in 2008, the risk remains that unregulated parts of the financial system could trigger a global panic. In the words of the IMF, it's up to the Feds to stop us from going into a second Great Depression. By the end of this video, Mr. Raoul Pal unravels where our economy currently stands and what we should expect in the next couple of months. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
You raised the cost of goods on people and didn't raise their salaries enough. People couldn't get the goods that they wanted, exactly like now, and everything collapsed. So we went back into recession, and then eventually some better times, and I'll come back into the 1940s and 50s because I think it's a really important parallel that most people misunderstand. The next time we saw anything remotely like this was 1974. A lot of people tell you it's the 70s again, inflation. Well, the inflation episode we had in the late 70s was driven by demographics. That was the baby boomers entering the workforce all at the same time. It was the largest demand shock the world had ever seen. And we had a supply shock of these oil crisis of the Arab oil embargo. That's not repeating now. What is actually more similar is 1974. 1974 was the Arab oil embargo. The price of oil tripled and interest rates went up. Inflation shot up. And the immediate effect was the economy went down the toilet. So then the next time we see something similar was 2008. The oil price was at $147. Inflation was 6%. The Fed had been cutting into that because the economy was imploding. 2018, exactly the same. Oil prices high, inflation high. The Fed were hiking rates, trying to tighten the balance sheet, and what happened is the economy rolled over really quickly again. Okay, so what's going on here? Why does this phenomena keep happening? Everyone extrapolates inflation out forever. What actually happens is that consumption falls because we've tightened monetary conditions. So tightening monetary conditions to ordinary people means the cost of your mortgage has gone up at the fastest pace in history. Over a 1 year period, mortgage rates have never risen this fast. So any money you borrowed has suddenly got much more expensive. Your wages haven't kept up with the cost of just basic services like food. So you're actually feeling poorer, so you can't consume as much, and you start not consuming other things. So we've got the setup that we've seen many times in the past. We've got the forward-looking indicators, this monetary tightening, suggesting we've got some real pain to come. Then the anecdotal evidence, we're seeing all the tech companies who were bulletproof laying off staff and giving earnings warnings because everybody can't raise prices enough. So their margins are falling and people have overextended. Amazon said, we've hired too many people. They're one of the biggest employers in the United States. Okay, this is not good. But the answer to higher prices is higher prices. And that's what's happened. And everybody's looking around you themselves saying, well, what's going to break when stuff like this happens? The market goes down, something's going to break. We're looking, what bank is it? What hedge fund is it? The actual answer is it's the economy. The economy has just broken and the Fed are going to have to pivot.
According to Raoul Pal, our economy is replicating the exact signs it showed back during the 1974 crash. It was the second longest bear market in history after the Great Depression. However, despite the fact that our economy could also crash like 1974, it's also important that we learn from the past crash and begin to invest accordingly. For example, investors in 1974 who convinced themselves that stock prices would never recover were wrong. But those who maintained a long-term perspective, focused on fundamental research, and thought stock prices would recover were right, even though bear markets can start and end without clear triggers, which can make it difficult to guess exactly when to get out of the market or to jump back in. However, establishing a properly diversified portfolio and staying the course through market cycles is very important.
The reason being is there's one piece of magic, the Fed balance sheet. The Fed balance sheet disguises all bad things, because what it does is when they print money, it lowers the purchasing power of the dollar. And most of the central banks at the same time do it. And people always think it's going to be inflation is what it leads to. It leads to something much more pernicious and evil, which is the debasement of currency. And what that does, how it manifests itself, is all of these scarce assets, equities, real estate, gold, crypto, go up a lot. But all they're doing is reflecting the devaluation of the fiat currency itself. So that optically can change everything, because suddenly all of these things go up, everybody feels okay, and it changes the outcome. People are still worse off, generally, but it's a trick. And so I think that trick gets played again pretty soon. This time I think the trick gets played in a different way, which was the other genie that came out of the bottle in 2020, which the Europeans are doing now, some states in the US are doing, Japan is doing, India is doing, which is direct transfer payments to individuals. I think it's going to happen at a shocking speed. So 1974, we went from everything looks okay to the worst recession since World War II in 4 months. I'm thinking it's going to look similar because of the speed of the monetary tightening, the speed of the rise of prices. So I think we are going to have a very ugly few months, both economically and for markets. The question is what comes next? And that's the key point. If my base case comes into play, which is the Fed pivot, they stop raising rates. They already started suggesting maybe we'll pause in September. My guess is June will be the last hike. And after that, they will say, well, we're just going to see, and we'll see the economy start going down the toilet. And they will start thinking, well, we're not going to do QT now either. So they're not going to start shrinking the Fed balance sheet. And before you know it, we're going to be talking about rate cuts, but we don't have many rates to cut, rates are nowhere. So the only outcome is they're going to have to print money.
It's clear from Raoul Pal's explanation that not only Bitcoin, but the total economic market is about to see a strong weakening. As Mr. Raoul argues, the biggest point of concern is not inflation, but the debasement of currency. Debasement is the deliberate reduction in the value of a money. For digital or paper money, debasement can be achieved simply by creating more money. Debasement is usually enacted by governments to fund their endeavors at the cost of their citizens. Governments from the Roman Empire to the United States have all debased their currency, with the American banks showing no sign of slowing down money printing. Do you think we will see a strong decoupling of our economy in the next few months, as Mr. Raoul suggests? Let us know in comments below. To learn more about the latest crypto news, watch these videos here.